There is so much financial information out there, some good, some not so good. So in this video, I thought I'd go over some of the top financial advice that you hear online and whether I like it or not, smash or pass. Now, why should you listen to me? You shouldn't. You should make your own financial decisions. But anyway, let's go. Okay, always buy the dip. Smash, but with a caveat. Yes, when the stock market goes down, it's a great time to buy. Everything's on sale, but you shouldn't just buy because something has fallen in price. You should investigate why first. You need 6 months of savings before investing. Pass. You can do both. You can invest and save at the same time. You don't have to wait till you reach a certain threshold before you start investing. Renting is throwing money away. Hard pass. No, definitely not. This piece of advice really comes down to where you live and what sort of lifestyle you want and what you're doing with your money. I choose to rent because I like my money in the stock market. That's what earns me income. But it's not always the case that renting is the worst option. You need to know what mortgage rates are, what property prices are, what sort of growth you're going to get in property if that's the area you're going into. Usually buying a house is not a financial decision, it's a personal lifestyle decision. So it is going to vary, and it's not always the case that renting is the worst option. Sometimes it can be the better option. Invest in what you know. Tentative smash. So yes, you should be investing in companies that you understand, at least on a surface level. Like, is it a bank? Is it a mining company? That sort of thing. If you have absolutely no idea what the company does or how it makes its money, then that's not something that I would invest in. You need to have a basic knowledge of what the company or what your investment is or what it does, but you don't need to know the exact ins and outs. Investing in finance should be taught in schools. Oh my God, hard smash. Yes, people's financial lives would be so much better off if they learned about compound interest. If they're encouraged to buy income producing assets, we would be in such a different place. So yes, I think financial education, especially in schools, especially young, is so important. ETFs are for lazy investors. Pass, no, this is not true. I personally prefer single stocks over ETFs. I feel like I just get a better return from single stocks than ETFs, but they're not lazy investing. They're a really good way to get diversification right out of the bat. It really depends on what you're looking for. Crypto is dead. Pass, it's not dead. However, I do not invest in it and I will never invest in it. It's not for me. It's a speculative investment and it's based basically on what people think it's valued at, and that's what impacts the price. And you can say that for a lot of investments, of course, but there's no underlying business behind it. So I do not invest in it and I won't invest in it. It's far too risky for me, but if it's your jam, go right ahead. It's just not for me. Stock picking is gambling. Pay off all your debt before you start investing. Pass. You can do both. You can pay off debt and you can invest. Usually you want to look at where the interest rate is. Where are you paying the most interest? Sometimes, especially like for credit cards, your interest rate will be higher. So you might want to prioritize that. But other times, maybe your mortgage or another loan you have has a lower interest rate. And so you would make more money investing. It really depends. You can do both. You don't need a financial advisor. You just need YouTube and TikTok. Oh my God, hard pass. No, don't get all of your information online, not even from me. While you may not necessarily need a financial advisor, there are plenty of great, excellent ones out there. And I would highly recommend, if you don't have a normal financial situation, that you go and talk to one. Dividend investing is only for boomers. What? The best budget is 50, 30, 20. No, pass. There is no perfect budget, and very often our expenses, our savings don't fit into these neat little percentages of our income. It really depends. So the best thing you can do is create a budget and work out what your income is and what your expenses are and work it out from there. It can be fine to look at guides on what you should be saving or investing, but overall it comes down to how much can you afford? You should always buy coffee at home and never buy takeout coffee. Again, hard pass. I don't like this advice. This is where your budget is going to come into play. You should be budgeting for the things that you enjoy and finding ways you can save money on things that aren't as important to you. If going out and buying a takeaway coffee is bringing you joy, then it's totally worth the money. Time in the market is better than trying to time the market. Oh, hard smash. Yes. Investing consistently over time has been shown that you will make more money in the long term rather than just trying to time those market fluctuations. If you're always trying to buy the dip and sell at the high, you might be able to do it occasionally, but you won't be able to do it consistently. Plus, it's far less stressful to invest consistently over time anyway. Don't stress yourself out. If you're not making money while you sleep, you're doing it wrong. Mostly smash. I'm a big fan of passive income, income that you're not trading time for. So that's why I like dividends so much, because whatever I'm doing, I'm going to get paid dividends. The company can figure all that out. I also have a few other passive income sources. Obviously, I get AdSense on this YouTube channel. I have some books that I still get royalties on. So things like that, I am not trading my time for. I've created a product once and I get residual income from that. Or with the stock market, I'm getting money continuously as the stock market and as companies make profits. But obviously that sort of passive income comes with time and building up. It's not going to happen straight away. So you are going to need a job in the beginning. You are going to have to trade your time for money in the beginning. I started there, we all start there. So are there any other spicy money takes that you've heard? Drop it in the comments and maybe I'll do a part 2. I hope you've enjoyed this video. It was super fun to make, and I'll see you in the next one. Mwah.